Good morning, everyone. Thank you, Cece. Believe it or not, we try to sort of coordinate our stories, so I'm going to sort of build on what Cece's sort of been discussing this morning, and add a bit more color around some of the other, aspects of alternative fuels, but also their associated sort of, markets from the commodity side. So I've got a rather interesting topic, or title, which is called To 2030 and Beyond, which makes it seem like I have all the answers here, but what I want to do is sort of discuss four key things, basically. One is look at those regulations, but from the perspective of the fuel producer. So rather than thinking of it from the asset back, fuel producer looking at the market from the outside in, then discuss a bit about the challenges and progress that the industry is making, and then discuss some of the opportunities around ammonia as a cargo and the liquid CO2 market. So what I'm showing here is basically the sort of penalty curves for FuelEU Maritime for a spectrum of fuels. And I think we had an interesting presentation yesterday around the mechanics of FuelEU Maritime pooling and banking. And essentially the insight I want to provide here is that basically fuel producers are doing the exact analysis that CC presented, is actually rather than building their cost sort of bases for their fuels from a supply side up, they're looking at it from a demand side. So saying, what is the value of a low carbon fuel to my customer, and how do I price that into the fuel? Which is actually quite a complex thing to do, because the function of that value is a function of course, the surpluses that you can generate from a low carbon fuel under FuelEU Maritime, the penalties you're trying to offset, but also the cost of the alternatives, so biofuels, essentially. So we in Lloyd's Register Advisory have been working with energy majors and fuel producers to help them understand this challenge. The other piece of the puzzle is sort of what Cece alluded to, is sort of where is this actually working on a sort of localized level? And I want to present a sort of case study for US blue ammonia. So the US have the Inflation Reduction Act. Within that, there's a carbon sequestration subsidy. So for every ton of carbon that you capture and sequester, you can gain a subsidy of X number of dollars per ton. And what's interesting is if you look at the blue ammonia value chain, which is essentially grey ammonia produced using natural gas as a feedstock. In the US, obviously, very cheap natural gas, stacked with a carbon capture system. If you take advantage of that subsidy, you can actually produce blue ammonia at a very competitive price or cost that, when compared to grey ammonia. So you could actually be in a situation where you're producing blue ammonia at a cheaper cost base than you are grey ammonia. And if you think about what CC showed of the premium you can actually charge that ammonia into the maritime sector, but also into the power generation sector and as a hydrogen carrier, that sort of de-risks the business case for producers. And this is actually working. We're seeing huge amounts of announced blue ammonia volumes being, announced in the market in the US. So we've got around 50 million tons per annum of announced clean ammonia capacity in the US already, the majority of that being blue ammonia. So then just looking at some of the other challenges facing ship owners, one of the core ones is obviously efficiency improvements. So that means, technical efficiency improvements on vessels. That's a significant challenge. It's a very fragmented market, a lot of technologies out there, a lot of uncertainty around the effectiveness of those technologies. What we found as a useful approach there is to actually decouple from individual technologies, find the relationship between CapEx and emission savings, and then basically reverse engineer the problem. So you work backwards to find the right technology for your ship. Then on bunkering infrastructure, I think this has been touched a couple of times over various presentations. Of course, infrastructure for alternative fuel bunkering is at a nascent stage. We do need a sort of entire value chain approach, but we are seeing, pilot projects, and Singapore is obviously leading the way on that front. And then the final element is the sort of human factor piece, where, we do have significant training gaps for seafarers, where we expect the adoption of alternative fuels to go smoothly, but those gaps need to obviously be addressed, and also the way in which we design vessels, sort of following a risk-based design process. So in terms of progress so far, I think this is quite interesting. If we look at the order book, or the new build contracting for the last few years, we can see, obviously a large portion of the order book is dual-fueled vessels, obviously with a strong lean towards LNG, because obviously the LNG value chain is, well established, and as CC showed, the pricing has also pushed owners in that direction. But we are seeing an uptick in interest in ammonia more recently, as confidence builds around, that we will address the technology gaps there. But what is interesting is over half of the order book is just, conventionally fueled. Of course, that shows, that the market is uncertain around, which fuel to go for. But I also think there's a big bet being placed on onboard carbon capture, which is a good thing. It shows confidence in that technology will mature. But it's also quite a challenge, because you're betting on the wider carbon value chain, which I want to discuss in a little bit more detail now. So the sort of context here is I was at GasTech in Houston last week, and there was sort of an overwhelming amount of discussion around liquid CO2, with some bold claims around, the number of liquid CO2 carriers we will require as a market, and so on. So I wanted to just provide a bit of commentary around that. I think it's widely accepted that we will have excess carbon being captured in locations where there is limited storage capacity. So we will see some level of liquid CO2 trade. However, there's a number of considerations that need to be made there, and I just want to discuss a couple of them. Big one is obviously the sort of whether you go for a medium pressure or low pressure vessel. Essentially, the choice there is low pressure. Your capex on your vessel goes up because you need higher specification materials and equipment to manage those pressures. Essentially, if you lose the triple point of the cargo, you will create basically dry ice. So you're essentially transporting a giant ice cube, which is not a great situation to be in. But your tanks can be much larger, so better for longer sea distances, larger parcel sizes. Medium pressure, lower capex, but smaller tanks, essentially. So it begs the question, will we see a sort of two, basically, CO2 markets, essentially? EU, which will be short sea distances, more, greater sort of fragmentation of that market, smaller parcel sizes, medium pressure vessels, and then the Far East, longer sea distances, Korea and Japan down into Malaysia or Australia, larger parcel sizes, low pressure vessels. The other piece I want to touch on is the purity of CO2 cargoes. So storage facilities have very strict specifications on the purity of CO2 that they can inject into their storage facilities. Now, the cargoes are going to have to meet those specifications if that value chain is to obviously work. And that's where onboard carbon capture has a challenge there. If we're going to be capturing carbon across a large volume of vessels, how do we address the purity challenge where you've got cargoes of different purities being consolidated and then expected to be traded? And one of the questions we get quite a lot in LR advisory is, what's the sort of least costly decision we can make if we're looking at the liquid CO2 market somewhat speculatively? And that sort of comes back to the question of medium pressure versus low pressure, but also vessel sizing. You can sort of answer that question by looking at unit shipping costs. Obviously you're going to gain on lower shipping costs with larger vessels. But I think this brings into question the whole multi-gas carrier concept. You know, there's a lot of interest around having a liquid CO2 carrier that can trade basically LPG, ammonia, and liquid CO2. There's actually a number of challenges around that, you know, operationally and commercially, mismatch in trading profile, you know, requirement to clean the tanks between cargoes that may take up to 2 weeks, and among other challenges. But I think there's value in a sort of 20K LCO2 carrier. My primary question here is this whole value chain hinges on subsidies. So if the subsidies don't, you know, materialize in the way we expect them to in a particular region, you need an asset that can be redeployed, essentially, you know, whether it be from Europe to the Far East or vice versa. And that's where I think the 20K range, there is value there, and it's sort of that piece of, if you're looking at the liquid CO2 market speculatively, it's potentially a slightly safer bet. And then just finally, I just want to touch on ammonia as a cargo as well. So again, I mean, you know, it's widely understood and sort of accepted that we will see large volumes of ammonia being traded via seaborne means. Why is that? Well, we'll have, you know, significant demand from the Far East for ammonia for the power generation sector and as a hydrogen carrier. Now, I think there was an interesting point made yesterday to say that ships are always delivered on time, but liquefaction projects are always delivered with a delay. I think we'll see something similar with ammonia. We've seen that already with announcements and pre-FID projects slipping. So I do think we'll see a slippage of those ammonia projects, but we'll see ammonia carriers hitting the water. So there is this question of, are we going to be oversupplied, particularly when you look at VLACs? We've got around 60 on order currently. You know, that's a fairly significant order book. However, a VLAC is essentially a rebranded VLGC. So we're asking, will the VLGC market be oversupplied, which is obviously a tricky question to answer. The other sort of thing I want to mention here is, if we talk about ammonia trade linked to power generation and as a hydrogen carrier, one of the benefits of ammonia is you can basically crack it and produce, you know, extract the hydrogen and nitrogen, and then that hydrogen can be used in the power sector. Now, there's actually, you know, in order to do that, you need an ammonia cracker. Now, there's actually no industrial-sized or industrial-grade ammonia crackers in operation today. We have small versions that are used for fuel cells and so on, but this is a major bottleneck around that value chain, essentially. So if we don't address the lack of crackers, we will have low cracking capacity, which will mean high capex, which will lift the cost of hydrogen that is, you know, comes from ammonia, which may actually push, you know, hydrogen customers towards looking, you know, at domestic hydrogen production rather than buying ammonia and shipping it via seaborne means. So I do think that's a bit of a risk there. And talking to sort of, you know, ammonia cracking kind of technology stakeholders, they're talking about a sort of 3-year development horizon at best for those industrial grade crackers. So something to think about. And just to summarize, you know, obviously regulations are pushing us in the right direction. Fuel producers are taking advantage of that, looking at it very closely. Obviously still some hurdles, but then on the market side, I really think there's a number of key questions that need to be evaluated, and there's a lot of benefit in shipping companies, cargo interests and financiers examining those questions in details to understand, you know, the drivers and the bottlenecks around these markets, especially when a lot of these markets are, you know, or, you know, stakeholders are looking at these markets with a speculative kind of hat on. So yeah. So yeah, thank you very much. Look forward to sort of continuing the discussion.